Hey, good evening, everybody. Ed Velasquez here, Random Walk Trading. It's Tuesday, May 8th. We're in full-blown allergy season. My eyes are about to feel like sandpaper, um, but we will get through this the best we can. Hope you guys are doing well. We'll do a little wiggling and jiggling tonight, go over our trades and see what we can find as far as potential adjustments, and we'll kind of leave it at that. Let's go ahead and get our disclaimer out of the way. And as you know, Random Walk is not a broker dealer nor investment advisor. This presentation is for educational purposes only. We don't know your situation and what level of risk is right for you, as we're not making any specific trade recommendations. The risk of trading options can be substantial, so please be aware of all your risks before placing any trades. That includes any cats, dogs, other animals that may be able to get to your access to your computer. Actual P&L can vary and be affected by liquidity, commissions, and slippage. All right. And we got links and updated our trade grid. Our Friday expiration trade, May 4th, we closed out at about 3,200 bucks. Market's kind of stuck in a little neutral thing here. We'll look at the charts here in a little bit. And then Booking.com, they got earnings coming up tomorrow, so we'll take a look at that position. We did get filled on a put vertical today, but we'll still see if we want to do anything with that trade. But other than that, and go back in here and look at Mr. Market. Kind of interesting ride today. He kind of went sideways and then back down. Hit a low around 230, and I think Mr. Trump was something about moving out of a Iraqi deal or something, and the markets kind of went down and then it immediately ramped back up. But it just it's a good two-sided market. That's all I got to say. After hours, pretty flat for the time being, but I'll take a two-sided market any day of the week. VIX around 1471. Obviously, a little bit elevated, 1556, then fell off a little bit. Not a huge jump. I mean, we're talking 4 cents when it's all said and done. And trend got a little bit more bullish as the day went on, but not a whole lot of action. The last couple days, the Friday and Monday had a nice little up move, and then we pulled back, get like kind of a little reversal bar going on. Reversal bars I like to see in the weekly charts. I put a little bit more weight in it. I mean, there are significant, but weekly charts typically I give a little bit more credence to or priority to as far as any kind of chart formations or patterns, that type of thing. But with that, let's go in and let's look at the SPX. Let's just look at the Monday chart here. I haven't shown this in a while. Russell obviously benefiting the most with the price of oil. Oil's been a nice little run here the last couple of weeks, and the Russell here in the last since Friday has had a nice little run up. Benefiting the most. IV rank is 0, obviously. SPX IV rank of 3% because we're just kind of going basically. And this is this pink line here. This is what we drew last week. We're on Thursday. It got a tight little triangle, and it's just trying to thread that needle. The question is it going to break after, what is this, the 14th? So that'll be next week. That to say, but it's pretty interesting. Same thing with NDX, pretty much going nowhere. We'll go down and go back up. FANG stocks, Apple's been participating a little bit after its earnings, and a nice little run up. Dow Transports, going on the upswing, which is typically bullish for the markets. The volume picked up a little bit today, but let's look at the S&P, and let's get our survey, and then we use that and when we look and review the SPX trades. Obviously, the weekly charts, again, got some bullish hammers here last couple of weeks, but very small ranges here last few days, especially today. So we got like a little bullish hammer forming today. Yesterday was a bearish hammer. And again, that's on the daily charts. But we're staying within this little sideways wedge. And the question is, are we going to break, or which way? Because we're kind of no man's land. We're in between the 50-day and a 200-day, and actually kind of in between the 21-day. So we're kind of going sideways here. Volume-wise, let's look at that. Let's look at the SPY so we can see the volume. And we can see that even though we went up, it's pretty good volume, or pretty good move to the upside. Off the 200-day, the volume was not, I was not impressed with the volume. And again, likewise, even with this higher here, we got volume going down. So going up on lower volumes, typically a warning sign. Good news if you're a bear. And looking at the weekly chart here, it's just like everyone's hanging out here. It's like a bunch of birds on top of a telephone wire. They're just hanging out, almost flat line here, almost this perfect straight line. But that could be considered bullish, another bullish, and then almost like a doji going on here. So far this week, we got 3 more days this week, so kind of early in the weekly formation. But what do you guys think the S&P is going to do? Go ahead and type in the box there, and if you got a price target, stick that in there. I'm just going to adjust some things over here. Yeah, Kim, next 30 days. We got 2750. Okay. Lower than 2800. Okay, that's a pretty good move, but not out of the question. 2600. 2550. So kind of maybe retesting this April low that we had, 2553. Okay. Yeah, and that, I mean, it's not. I mean, it's like someone turned the switch, after January 22nd. It just the slow grind up here, and we're just kind of just, flatlining almost. Sideways and lower. 2640. Okay. So it looks like the majority of you guys are sideways or lower. So, all right. So let's start with the Thursday. We talked about our new SPX trade. We got filled. Friday we kind of went up, then went down, and got filled on both of them. And it felt pretty darn close to the we talked about how to price those butterflies, and it pretty much went almost as a textbook case a little bit. I rolled the calls down a little bit, and you probably could have waited and got the price, but other than that, went pretty smoothly. So this is trade number 24D as in Dougie. And our initial position is what we got here. So we got 225 on the calls, about 10 points lower, I think, than we talked about on Thursday. And obviously we got filled on the put fly. As Friday we kind of ramped up and got our put fly on. So we said here we lose $125. So the question is, how can we get some of that back? We got an order in on the call side, the 2700, 2710, the vertical. It's right now at 385, and if we get filled at $1, that'll take the risk off. Obviously, on the upside, we need a little bit of help from Mr. Bear, but that would give us almost a free fly, but we're playing with house monies at that point if we get filled on the call side. And then a couple of emails want me to talk a little bit more about the stack fly concept, and it is something fairly new. I'm just using that term. Let me see. Let's see here. I could do. Yeah, Kim, I'll touch on that as well. Yeah, that's right. Yeah. So basically, what we're trying to do here is if we add another butterfly here, it's going to be essentially another. You make it into a condor. So you kind of just think of a triangle, and you're just kind of stacking up. If you put an upside down triangle here, you get up a put condor. If I stack another butterfly right on top of it, which is why we double the number of contracts, it adds it to the top and then extends it, and that gives us our bigger profit area. So one of the things that we kind of queued up on Thursday, oh, here it is a stack fly down below on the outside. I've got the Venus put fly. Let me turn off the calls. There we go. So the one standard deviation move is around 2570. We got a little bit of the butterfly underneath the tent there. If we go to 2 standard deviations, that's 2470. So we got a little bit to play there. 2375 we can get to profit from. And we looked at this. This is a stack fly. It's 25, 45, 25, 15, 24, 80. And that cost us $500. But you can see it increases your profit area. And we do incur a little bit of margin, $3,100. But for a $500 investment, you're really beefing up your profit area down here. Now, there's no reason that you always have to do it outside, and we've done this with regular adjustments. Is you can do on the outside here. Obviously, it'll be cheaper, but if we do something on the inside, and get it a good deal, I'm all for it too. So I queued up it's another stack fly, but I'm putting it before the Venus put fly. And if I do that, we get something like this. Now notice the cost. You get 50 cents versus 20 cents. It's like, how is that possible? This one's closer at the money, and this one's further out of the money. Well, don't forget, in any kind of butterfly, you got your strike selection of the short spread versus the long spread. And you can vary those in any kind of butterfly. You can do broken wings, you can do Venus flies, and by adjusting your strikes, that's how we can get the price down. So for a $200 now, granted, you got a lot of margin, 78.25, but you got a higher probability trade. Cost 20 cents. Now, if you're worried about margin, that's 10K is the max, 5s are average, kind of in the middle down here, but we got to get below 25.30, which is a 1.5 standard deviation move to the downside. If you want a little bit more protection, just walk your outer leg out. Whoops. This guy. There. So here we went from 20 cents to $1.15. Now, if you think we're going to keep drifting higher, you may want to put this on. But again, we're doing twice as many contracts at $1.15, even $1. You're spending $1,000 in the trade. The trade-off is you get about 5K of less margin. My vote would say, hey, 50 cents or less, 20 cents sounds pretty darn good. If we get some kind of nice opening gap up in the morning, we probably can get that for 15 cents potentially. So we get 7,700 risk, and we get something a little bit closer at the money. So I think I know which way you guys are going to vote, so I'm just going to put one in here on the put side. And we're going to try for 20 cents. Oops. I'm going to wait till after the first hour. If you get it before then, great. At least the market makers will be cooperating, or hopefully in a good mood. So I'm just going to wait till after the first hour. So we do incur some margin, but we do have to go through the profit zone before we get down here. So now the same thing with the stacked fly, putting it beforehand, it does beef up your put side. So for a $200 investment, you go from 17K max profit, 24K. I mean, it's nothing to sneeze at. Buy a nice little Kia or whatever your favorite sports car is, or convertible. Be a nice down payment. Maybe want a Tesla. So that is trade 24D is in doggy. So I'm going to export this. And the call side, we just got that call spread, and for the sake of time, I'm just going to leave it at this. We got some time with this guy. All right. Our next SPX trade is trade 21D, which is the May 18th expiration, a week from Friday. And not all these are filled. And I don't got that either. That's not filled. So this is where we did the iron fly, remember? And we did a put broken wing butterfly on the downside. So there's the iron cockroach trade that we did. We actually got filled on the put fly before we got filled on the iron cockroach trade. Now, granted, this has got till May 18th. We're getting some nice theta, 134 positive theta. But again, if we're worried about something to the downside, this is $4,800 of risk down below 25.40. And we've looked at, now here, I think we got to, this is from last time, the stacked fly in this case is 90 cents. That's $900. Not interested in that for that monies. That's a lot of juice to put into the trade. Now, if we wanted to see if we can get the trade-off, let's see, we go down. Yeah, so that's a 5-point move. We got 5 cents off and over 10K margin, and that's just the one strike. So not too interested. We'll just kind of wait and see. And we really don't have to do anything. We're right. Let me back this up here. Thank you, James. So one standard deviations there at 26.05, 2 standard deviations at 25.04, and even if we sit here, we get $200. And we're pretty much covered from the 1 to 2 standard deviation. We got a butterfly waiting there, so not really seeing anything. Now, granted, now if you're still liking that stack fly, you want to put it in for 20 cents. Hey, it's a $200 investment. Stick it in. Because you did have $200 knocked up here, so you notice that, hey, we're at 0 here and 5,000 margin if you get it at 20 cents. Hey, let's do that. I'm going to stick that in there for 20 cents just in case we get some kind of crazy run up. Got that going on. And take him off. Otherwise, we're kind of sitting here in nice positive theta land, and we'll just let the theta kind of burn out. So up a little bit of money. Let me save this guy. All right. Next up, expiring this Friday, the May 11th expiration, that is trade 20D. let's see here. This is, yeah, this is what we got. And getting some really nice theta. Now gamma is also going to start kicking in here pretty much. If we get above 2700, we got some potential things to look at, but and we got 5850 on the downside here. But at this point, even in between is 1650. But again, we could do something potentially here. Granted, it's only going to be 3 days, but just for giggles. Let's analyze. And let's look at, say, 2580. 60. Yeah. Let's see, margin there. Yeah. What do I got? I'm missing a strike or something, or a strike off. Oh, 25.75. That's even better. So that is at 15 cents. And got some margin there. If we walk this out of strike, I might do that. Now, this is totally optional. It's. I'll leave it up to you guys what you guys think. And it depends on your diagnosis. If you think we're going to be down in the next 2 days, it's a 3-day trade. So I wouldn't want to say it's throwaway money. Looking at our 1 standard deviation lines, we're looking at 26.35. But the other thing is, some of you said 2600. And if we go to 2600, your P&L is right dead at the base of this here, 1650. Now, it's at 45 cents. Obviously, if we get a run up tomorrow, we can probably get it, let's say, a quarter, just for sake for conversation. If I get filled on that, I spend 125 bucks. But if you've got a winning lottery ticket at 2,600 bucks, you're gonna be quite happy, because you'll be, it's what, 11,500 if we end there by Friday. Now we do have risk. You're ending 84.75, but again, for a very short-term trading, getting something higher probability. The other thing is that at these round century level, now we could also go to 2,700. I don't know. We don't know what the market does. We're just looking at where we can leverage our trade. But I'll leave it up for you guys. Do you guys want to do the butterfly for the put, maybe for a quarter? That's it without it. And that's is with it. James asking, can we do twice as many? Sure. Let me just keep it up. Obviously, if you want to get 2 for 1 special, it's 45 cents. But again, you'd be spending 250 bucks. But if you get to 2,600, you get a nice little 21K pocket window there. And you're pretty, we kind of max. If you got portfolio margin, but you're going to have some margin on the downside if you double up, James. But I know you like to trade big. But yeah, it's definitely a possibility if you want to double up. But just trying to keep it between the lines here. Yeah, let's do it for 25 cents. Okay, we'll put one in here. Let's do. Oops, let me put this in after first market hour. All right. so we got that queued up, and let me just save that because it's not filled. Now, likewise, on the call side, one of our basic tenets is, hey, when we got in the money spread, we need to see about taking some of that off. So let's see what what we're looking at specifically is the, this 2665 strike is in money. If we can get 80% on a 5-point strike, take the money and run. It's 2570. So right now is at 295. I'm gonna say $4.10, and I just picked that the 10 cents to help pay for your commissions or fees or whatever. And if we get filled, great. Still got that. Still some room to the upside. But if we pull back, we at least got $3,700 banked. And if you get filled on the put, you get something like that. So let's kind of gear that up. Obviously, if we run up, we should be able to get filled on that. Oops. 10. All right. So that takes care of the call side. And not filled. Export that out. All right, so that takes care of that guy. So we got a couple potential moves with this one that we'll play. We can play with the upside, but again, for sake of time, and my eyeballs are just ready to be ripped out of their sockets. Or now the allergy drops, they do work, but it's like my doctor says it's after there's so much pollen in the air, it really doesn't matter whatever medication, your body just gets saturated with the pollen. But let's export. Yeah, and apparently my dog's got it. I don't know if it's an allergy, but a reaction. But when he gets pollen, I guess on his paws, he just starts licking his paws till they're almost raw. And the vet says, it's either you got to wash him off every time he goes out and comes back in, which is a big pain in the butt, or just take him where there's no pollen. So I kind of cheat. I just bring out the Binford 2000 air blower and blow off the sidewalk and that before I let him out, and it stirs up everything. But I'm not going to be washing his paws every time he goes to go outside, type of thing. So all right, so this is May 11th, so we're good there. We got two other trades. Let's look at our Google trade first. And this one's June 15th. And as I mentioned today, we got filled. No, that was booking.com, not the Google trade. So this is what we got. It's a pretty bread and butter type position. Let's look at the chart. Now, June 15th, quite a ways away, but what do you guys think of Google? You think it's still on track to go? You guys were bullish. You guys still bullish on Google? Pull back a little bit, but 200-day seemed to have some support, and it's hanging around. The weekly, the 10-week moving average seems to be holding its own. You guys still bullish? Very bullish, 1100. Yeah, okay. Yeah, I think it with all this market back and forth, you kind of got like a little bottom going on here, another potential, almost a double bottom going on here. I'd like to see a little bit more volume on these upswings, but let's see what we got here. So we got our little put spread. Now we did 4 of the put verticals and we did 5 of the calls, just to help reduce some of the risk on the downside. So we got $3,600 of risk down below 1,000. And Google can move, but if you guys are still bullish, we can do a stack fly. Now this is after it, and that's for 50 cents. And again, just for giggles, let's look at if we were to put one before it. What would that look like? Let's see, 1170, 1130. Oops. And maxes it out. That's $1,600. The other one looked more interesting. The 50 cents, but again, I'd be aggressive, maybe 40 cents. So I'm spending $400. Now remember, when we put this on, we put this on for a credit. So if I get filled for 40 cents times 10, I still got even monies in the trade. But if we do get the run up, then we've almost doubled the upside. So the stack fly could be a nice little tool in your tool belt. So let's see if we can do that. And we'll put that in 40 cents. Since you're bullish. And again, I'm just waiting after the first hour, mainly for just not to get these erroneous paper fills. Now on the put side, obviously we got to take a look at if we want to reduce some risk on the downside, because here, June 15th, we got some time now. Obviously, the 1 standard deviation here is at 990. Almost a little more than 10 points past our short strike. We can add a butterfly down here, and by doing that, give us a little bit more wiggle room, gets us down to 970. I think we looked at this a couple weeks back. It's $1.05. I think we may still have that order in for $1. Let's no, we don't. Let me put it back in. And so again, I'll be spending $400, and if I get filled in that and that, then we can lose $500. But we got our break even move down here at 970, a little bit more wiggle room. So that's another potential. But just you can see by manipulating any kind of position would be a shorter butterfly, and adding a butterfly. I said an exotic butterfly, but that's regular butterfly or broken wing, but playing with your strikes and your wisps, you can see how you can really manipulate the upside or downside. So we'll see if we get filled on that. So if we get filled on both, then we got to find $500 or whatever to get out of the trade. But you guys are bullish, so that's next one. This is trade 23B as in boy. All right. And lastly, I think Booking.com has their earnings are after the bell tomorrow, and we got filled on the put vertical that we talked about way back when for $1. So let me take that off. So this was our position, and then today we got filled. We spent $500. Now we had $1,100 underneath the tent here. I spent $500, and that pretty much takes the risk off the table on the downside. So if after hours it tanks, hey, we're all for it. We got 5,600 bucks, but we could always see, hey, can we do more? So let's go. So one standard deviation, 2100 to 2230, which is good because we got our nice little butterfly on the upside. Two standard deviation is down here at 2040, and if it is, we'll make 600 bucks. Not the greatest, but if we want to get some monies, and when we got something that's kind of far apart, relatively speaking here, you gotta have a 3 standard deviation move here in the next 2 days. Possible, yeah. Likely, probably not. So how can we address that? Well, that's where Mr. Condor or Mrs. Condor come into play. And I kind of queued up one here for you. So this is a regular put Condor for $1.20. You may want to get it for $1. So watch what happens when I click. You got still make even monies here. You got a profit window of 37.50 starting at 20.90. And if you do the 2 standard deviation, you're covered. And your risk is 12.50 down below this particular level. Now, if you want to incur more risk, obviously you can, play with your strikes. I mean, if you want to go further out of money, you want to go moving it out. It's going to be a lower probability trade. So here is this would be $1,000 at $2.05 times 5 contracts. I was trying to get the cost down and not get this below 0, so you can reduce that. So that's $1.20, but you're further out of the money. Again, I was trying to get as close as I can, and you can play some of the strikes. But if we get some kind of move to the upside, and volatility be elevate up and go into the close, if you want to put an order in for 75 cents, obviously we'd be spending a little bit of money, but at least you get a little bit bigger window on the downside. Up to you guys. What do you guys think about the put side? You want to leave it as is and play the lottery ticket for a major move to the downside? I guess let's pull up the chart too. And I keep doing that. So like when the year changes from 17 to 18, it takes me like 2 months to get used to putting 18 on things. So Booking.com, the old Priceline, kind of been going sideways here lately. One up, it's pulled back a little bit. Did almost the exact 5-day average true range today, 43 points, almost 44 points. Most of the volume was on the sell side, and even on the weekly chart, pretty much status quo. Typically into earnings, it likes to rally. This is after market close tomorrow. What do you guys think about Booking.com? You think it's going to go higher, lower? Yeah, the market maker move was saying from 2269 to 2054. So it's a pretty, I'm just going to jot that down so we can look at it on our chart. 2254. Not much price damage considering the selling volume. Yep. So 2054 down to here. 2260. We'll take it. It's right in the butterfly. Leave as is. Okay. Yeah, well, I mean, we could definitely let it pan out. Now the other thing, analyze trade. So someone said 2050, or no, I didn't say that. The market maker moves to 2050. Let's see if we go to 2060. I'm going to do 2040. And I'm going to shrink that down just a little. There's 250. 90. And oops. And let's do yeah, James, I was thinking about you. Yeah. So here, market maker move saying 2054. But here, just doing now, we're doing 10 contracts, so this is $650 if you can get it at this price. If we get some kind of move to the upside, might be able to get it for a cheaper price. We are adding some margin if we get a huge move to the downside. $1.30. I don't know if I can get filled for 50 cents. I might be interested. And that leaves at least $100 on the table and at least something on the downside. Yeah, let's do for 50 cents. Okay, yeah, I mean, we may not get filled. If we don't get filled, we're not going to worry about it, but I'm not going to spend $1,300 in the trade. And who knows, we could have some kind of rally tomorrow. We go back in here, and we might be able to get filled on this downside. And I apologize if you hear a howling dog in the background. My neighbor's dog is doing his business next door, and for whatever reason, it must be a psychological thing. Anytime my neighbor's dog goes out and does his business, my dog just goes barking like someone's broken into the darn house. It's just, I was like, dude, he's been living next to you for, I don't know, 4 or 5 years. He's your neighbor. So, all right, so that is our booking trade. So I'm gonna save this, see how it goes. There we go. All right, so we are loaded for bear. We'll see where the chips may fall tomorrow. Getting fills, I'll put them in the chat room tomorrow. Otherwise, I'm going to be soaking my eyeballs for the rest of the night. And we'll back on Thursday night, and we'll look for another weekly trade. And hopefully there'll be some rain in the forecast, but not much I don't see in the next week or so. So, all right. Get a question, shoot me an email. Other than that, have a good rest of the evening, and we'll see you guys on Thursday. Thanks.